Thanks, Jane. Well, how's the business world reacting to the re-election of Barack Obama? Let's get some of that now from Alice, who's here with us.
Thanks very much, Kirsty. Well, of course, the reality is that markets priced in the possibility of Obama win a couple of days ago. So no great surprise that they have received a boost across Europe. The FTSE up in London, 0.6%, in France and in Germany, a similarly positive view. And there we have it at the bottom of the screen, the Dow over in the US, that ended the session up 1%. All right. Well, President Obama, though, won't have that long to enjoy his victory, as there is a crucial issue that needs tackling quickly. As we've been talking about, the so-called fiscal cliff. It's a combination of tax breaks, which run out at the end of the year, and automatic spending cuts. Now, while the US does need to make savings, these measures are so severe that they could derail the US economic recovery completely. Well, from New York now, Ben Thompson has more, or we will be going to Ben in the next hour, hopefully. But right now, let's get some more analysis on this by speaking to US business commentator Daniel Costello and also Edril Balls from PIMCO. That's the world's biggest bond fund. And many thanks to you both for joining me. Andrew, if I could just speak to you first, how should and will Obama deal with this so-called fiscal cliff?
So it's quite unclear. He's won the election, but the challenge remains to try and reach compromise with Republicans controlling the House. To date, that's not been an easy course over the past 4 years, clearly. It seems likely that there's enough that the Democrats, the Republicans that agree on, that they will be able to stave off the very large fiscal cliff, but a big uncertainty over quite what a sticking point Republican demands will be for no tax increases for the wealthy. So the baseline is there will be a compromise, there will be some significant fiscal drag, but not enough to push the US back into a recession. But there is a risk of gridlock, as we've seen before, which would have a very big impact on market confidence.
Daniel, I can see you nodding your head in agreement there. Democrats, we know that they're looking for a combination of spending cuts and tax increases. How painful do you think all of this is going to be for the average American on the street?
I mean, I think it could be extremely painful if these cuts were allowed to go through. My sense is there will be some kind of compromise. I mean, President Obama has privately and aggressively in recent months been pushing for what he's calling a grand bargain, which will be a compromise with Republicans of some tax increases, but also cuts to entitlement spending, particularly around Medicare. I think that though most of these legislators are the same legislators who have been in office in the last Congress, I think they'll come to a compromise. I think a big difference of this moment than it was even a few months ago is Republicans are weakened after this election. I think what many are calling a shellacking for Governor Romney, I think that has weakened the Republican ability to counter some of President Obama's wishes and demands around this fiscal cliff.
And Andrew, with Obama back in the White House, I think we can surmise that Ben Bernanke's job is safe. How important do you think that is for the stability of the bond market?
So you have the status quo, deja vu. We're back with President Obama divided Washington. Governor Romney, as part of the campaign, had attacked Bernanke. If the election had gone the other way at the margin, there could have been some influence in terms of Fed policy. But as it is, we have the status quo, everyone relying on the Federal Reserve and significant fiscal risks, gridlock risks that threaten to impact.
Sadly, we seem to have lost Andrew there. But Daniel, if I could just put one final question to you. Both you and Andrew have talked about how the highly politicized nature of American politics has delayed any sort of consensus on this. But with that deadline of 31st December looming, when are we going to reach some kind of resolution?
I mean, it's unclear at the moment. I mean, I do have a sense that President Obama and Congress will come to some short-term solution, perhaps even, in the first few weeks of January, and they must. I mean, I think for overall confidence in the market, and so I think they'll come to some kind of short-term solution. After that, I think Obama will look in the rest of his term for some more pragmatic deficit reduction plans, and he'll have to compromise with Republicans on those as well.
So short-term sticking
Yeah.
plaster solutions
Yeah.
expected. All right, Dan Costello, and of course earlier Andrew Balls from PIMCO. Many thanks for that analysis.